Hi, everyone. This is Demel Gonzalez of Heartwood Financial Services. Welcome to another edition of the Market Update for the month of June. Although we're just past the 4th of July, and so thus the cool American flag. I hope everybody had an awesome 4th of July. Our family did. We all survived. No burnt hands or anything. It was a lot of fun. I hope everybody's having a great summer as well. Thank you for joining us. It's going to be another great update. Again, as a reminder, for those that don't like to watch the whole thing, that's okay. You can watch the first 12, 13 minutes or so. You get the executive level summary. But for those of you that like to stick around and get more of the details, the videos for you too. There's plenty of stuff in there this month. So thanks for joining us. Enjoy. And again, feel free to share. Thanks. All right, let's get started with the asset class returns. As you can see for the month, we had another pretty good month. There was just a couple little reversals from the previous months that I'll highlight here. But first, let's start off with small cap stocks. You can see, or large cap stocks, forgive me, up 2.33% for the month, up a nice 15% for the year. Small cap stocks were only up 0.33, so just barely positive for the month, but still a very strong year, up over 23%. Real estate up 3.19. Real estate was actually the winner for the month, and this is actually a trend that has been going on for several months, and that one didn't change, so that's interesting. Up over 23% year to date. But the big changes were international. You got the developed market, which is in the blue, and the purple is emerging markets. Those were both down a little bit for the month. And so that's a little bit of a reversal, what we've seen over the last few months. Some of that has to do with the dollar. We'll talk a little bit more about that here in a little bit. The dollar and, of course, the variants that are out there that have been hurting global equities more than us here domestically. Last few years, fixed income up 0.75 for the month. These are like the good old aggregate bonds, the safe conservative bonds. And so they've been starting to creep back up. A lot of folks thought they would be doing pretty horrible, but surprise, they're up 0.75, but still down a little bit for the year. And then high yield up 1.62, which is actually a pretty darn good month for bonds. And up 2.5 almost for the year. And then, of course, the big eyesore is gold. Gold was down negative, down 7%, over 7% for the month, bringing it negative for the year. And we'll talk a little bit more about that as we talk about the dollar, but I know that's a big surprise for a lot of people. All right, for the market update slide, I have it titled A Shift in the Wind. Hopefully I'll give you the answer to that. So let's talk about some of the topics that's been going on for the last month. We have the variants causing more concern. You've probably seen that in the news. That's been coming up more and more. There's the alpha, the delta. They got every Greek alphabet out there for these variants. And they do seem to be becoming more pronounced. And so we're seeing a lot of countries, outside of the U.S., of course, but even here, that are starting to shut things down again or restrict things. So the global economy is actually kind of struggling a little bit with this. So this remains to be seen what will happen with these variants. Inflation, the numbers that came out from June were up 5%. This is one of the highest numbers we've seen in decades. That's the year over year number. But ironically, what do interest rates do? They didn't go up. They actually went down. And so when we get into the extended version, I'll talk a little bit more about that, but that had a lot to do with what the Fed said a few weeks ago. But the bond market's essentially saying, you know what? We're really not that worried about inflation. Maybe this is peak inflation. I'm not sure if I'm buying that 100%, but it's at least interesting to see, what the bond market's saying about that. And then the dollar is strengthening. This kind of goes along with rates coming down. So the Fed talked about how they might be tapering and bringing interest rates up. I know. How does this all make sense? How do rates go down when the Fed's talking about raising interest rates sooner? Well, it's because it slows the potential for growth down the road, and growth is ultimately what drives the longer-term interest rates. And this higher potential interest rates strengthen the dollar, which is one of the reasons we saw international not do as well, and gold take a dip, and all the stuff we highlighted in the asset class returns. So again, more stuff to come there on the extended version. And then finally, the leading indicators continue to be strong. I mean, they have been phenomenal, okay? And what's going on is you go from phenomenal to great. Okay, so yes, they're slowing down. A lot of people are talking about, oh, have we hit peak growth? And maybe we have, but it was insane growth a few months ago. It's getting a little bit more back to normal. Yes, it's a little slower, but I'm not exactly pushing the panic button just because we go from phenomenal to great, right? So we'll talk a little bit more about that with a couple examples to come. All right, and everybody's favorite part of the program, and that is the outlook slide. So what does Demel think about what's going on for the months to come? So I titled it Head Fake or Peak, because we're definitely seeing some things change here over the last few months, or really the last few weeks. And so is it really just a little blip, or is it something that's changing and that's going to be more permanent? Well, we'll talk a little bit about that. So first of all, what is changing? I call this part the trend reversal. What we've seen for the last 6 months is value stocks, international, small caps, they're all been doing great because the economy is growing, it's coming back, and so these beaten down stocks have been outperforming. Well, what happened last month? The reverse. So now we have the growth stocks, the ones that were doing great last year, starting to win again. So what's going on? Again, we'll talk a little bit more about that in the extended version, but a lot of it was what the Fed said, and we're starting to see some economic indicators that are maybe slowing down a little bit. So it's kind of a combination of things and the variance that I brought up in the market outlook that are kind of spooking people a little bit. And then of course, you hear me talking about valuations all the time. It's still elevated. That hasn't changed. The market's been going up. It's getting a little pricey. But if you stick around for the extended version, I'm going to talk a little bit more about how it compares to other parts of the stock market. Because just because U.S. stocks are getting kind of pricey doesn't mean that everything is pricey. Okay? And then finally, as far as the portfolio, I'm anticipating, you never know these things for sure, but I'm anticipating the market either to take a pause, maybe a little dip. Markets are expensive here in the U.S. Usually when you have such a big run, it's normal to take a little breath out. And so I'm anticipating some of this, which is why I'm continuing to kind of cash in some of the gains through the rebalancing, and specifically targeting more to the international. So kind of the same thing from last month, essentially a continuation of that. All right, and the educational slide for the month is about cybersecurity. You've probably been watching the news and hearing about the ransomware attacks, all the cyber threats. So I thought it's probably timely to talk about this. Recently, I just had a consultant with an expertise in cybersecurity actually come and help me out here at Heartwood and do a good evaluation, give me some ideas. We implemented lots of different things, and I learned a lot, and I thought I'd share a few thoughts with you guys because a lot of this applies really to every user of the internet. So I got 3 tips. So number 1, I just wanted to keep this simple because there's a lot of tips potentially out there, but these were kind of the 3 main ones that the consultant said that he would suggest. So never open an email attachment that you weren't expecting. So he said that that's the number one way viruses and all the ransom attacks get started. And sometimes it's even from somebody you know. So this is the challenging part. But if they send you something that you weren't expecting, or that's unusual for this person that you don't know, or even the ones you do know, he said to be very leery of it. And in fact, you should maybe even email that person and just make sure that they actually sent it to you. Sometimes you find out they never did. Okay? And so please do not click on anything until you confirm it. Okay? Number 2, change passwords often. And when available, use multi-factor authentication. Okay, so you may have seen that. Multi-factor is where you have to put in a password and then it will like text you and you have to confirm something else on top of that. And so it's just another layer of protection on a lot of websites, and a lot of cloud services are starting to use that as well. So he was strongly encouraging us to make sure if that's available, use it. It's definitely a great tool. And finally, this seems kind of like a no-brainer, but a lot of people don't know what a VPN is, so I thought I'd bring this up. But he said use a VPN when using public Wi-Fi. So, we've all gone to a Starbucks and you have your coffee, you get an email and you want to check it out. Well, you may want to be careful. You don't know who's sitting around at that coffee shop. There could be somebody that is nefarious. So a VPN is a verified private network. And you can get this very cheap. I have one through Norton Antivirus. They also have a VPN. And it's like $50 for the whole year. And it adds like an extra layer on any of your wireless devices so that when you go somewhere and you use Wi-Fi, it is using a network that nobody else can see. It's like your own personal little pipe to your phone or to whatever device you're using. So strongly suggested anytime you use public Wi-Fi. Okay? Hope this helps, guys. Okay, and finally, I always like to end with an inspirational note. It's actually a pretty darn good question. How much money should you leave to your children? Well, I read this great article here that had the same name by Joseph Slife. And if you want to learn a little bit more, I'm happy to pass it along to you. It was actually a pretty good article. Here, I'll read to you a couple of the verses that kind of frame the article. The first one is here in Timothy. For we brought nothing into the world, and we cannot take anything out of the world. I think a lot of us already knew that, but it's sometimes important to remember you can't take it with you, right? So that's the first part of it. So if you can't take it with you, what are you going to do with it? And so that's really the big question. Solomon, who's King Solomon, he was one of the wisest kings, in all the ages back in the day. And he wrote this quote here in Ecclesiastes: I hated all the fruit of my labor for which I had labored, because I must leave it to the one who will come after me. And who knows whether he will be wise or a fool. So, he had a lot of money, so he definitely was thinking about that. And he was anxious about, giving it to his heirs. Now, I don't think he was saying that it's bad to give it to your heirs. I think he was just worried that they wouldn't know what to do with it, or it would ruin them in some way. And so I think that's the question that we need to ask ourselves when we think about what to do with it, right? How much is enough? How much would actually benefit the kids versus tipping it to the point where it's hurting them, right? And then the other thing that I got from reading the article is that it's not just about the inheritance of money. It's about the inheritance of the wisdom that it took to ascertain this money and to, keep it and to grow it in a good stewardship type mentality. So those are the things that we should be thinking about. And of course, there's no secret recipe or formula to how this is done. So, If you need to talk to somebody about it, I'm here for you. I can share the article with you. We can discuss it. But it's definitely, these two verses kind of give you some good food for thought. Hope it helped you. All right, and then we have inflation going up. Seems like almost super high relative to what we've seen in the past. But why in the world is the 10-year Treasury yield actually starting to go down a little bit? You can see that it's down here at about 1.33, and it was at 1.7 in the spring. What's going on? So the inflation rate's getting higher, but what's happening is the bond market's kind of calling the bluff of inflation. It thinks it's not going to get that much higher. That's basically what you're seeing here. And a little bit of that was confirmed by the Fed saying that they're more concerned about inflation. Sometimes this stuff is kind of hard to grasp entirely, but that's basically what's going on. And so as they start to raise rates or reduce the stimulus, it's going to slow the economy down. And when the economy slows down, rates tend to start going down. And so let's see what happens. I think the rates will probably bounce back up. I think this was probably more of a blip, probably more of an overreaction to what the Fed said, but maybe not. So I will definitely be keeping a close eye on this one. All right, in the outlook, we were talking about the dollar. And as you can see from the chart, it's generally on a trend going down. But recently it's popped back up. Okay, so this is all about this trend reversal I was talking about in the outlook. Again, is this a blip or is this the counter trend? I don't know. I think it's probably more of the latter, the counter trend, or I'm sorry, a blip, and we'll probably get back to the dollar weakening. But for right now, with interest rates maybe going back up because of what the Fed said, it's making the dollar look a little bit more attractive. So again, something to keep a close eye on. But again, I think this is probably more of a blip. And the last piece on the update, I was talking about how the leading indicators are going from phenomenal to great. And so you can see it here on the chart. This is an example of the ISM non-manufacturing PMI report. This is actually a really, really important report to the U.S. economy because it's the service jobs. The service jobs is like 70% of our economy. Okay, and so what you saw here in the spring, it went way up. I mean, we had 65. That was like the highest we've seen it in decades. And now it's a 60. Okay, so when you watch the news, they'll say, "Oh, well, it's the PMI has gone way down." Well, yeah, because it was at 65, and now it's 60. Anything above 50 is economic growth. Okay, so this is still very positive, but it's kind of coming off a little bit of maybe a sugar high. Okay, but still very positive. All right, so the trend reversal. Let me give you a quick update on the trend. So what we've been seeing over the last 10 plus years is growth doing better than value. That's the line going down. Okay, when the line goes up, that means value is doing better than growth. Okay, and so the recent trend, since really things have been starting to heat back up with the economy, is value's been coming back. So you can kind of see it by this little line. I know it's kind of hard to see, I apologize, but you can see it kind of going up. But then recently we've had what I've been talking about as this trend reversal where it's been coming back down again. Now I think this is more of a blip because you could see that it's actually gotten back down again to kind of like the extreme levels we were at almost 6 months ago before this huge run up in value stocks. So I think that this could be reversing again and going back to the trend of value stocks outperforming. Another point here is to show you this is the last 10 years And as this has been going down, that's growth doing better. And here's all that value has done over the last few months. It's made up a little bit of ground, but look how much more room it has to go. Huge. So to say that it's over, I think, I just think it's an oversimplification. I think we got a little bit more catching up to do with those value stocks. Make sense? Okay, you've heard me talk about the valuations and how they're kind of expensive. You can see here in this chart how the line's going way up. That's valuations. You can see how we're close to where we were back in 2000. Remember 2000 with the tech bubble and everything else? So it's getting almost to that level. And so that's what's getting people a little concerned, and obviously myself included. And so the S&P 500 maybe is a little expensive. This is a line chart for, or graph I should say, for the S&P 500. But the point I wanted to make with the side-by-side is that this is the valuation for the MSCI All World ex-US, basically the non-US companies, international companies. And you can see how it's down way low. So you don't have to be a market genius to look at this and say international stocks are a much better deal right now than domestic stocks. And that's basically the gist of what I wanted to explain to you here. Just because the S&P is expensive doesn't mean everything else is. So this is why you're seeing me starting to shift a little bit more in the international. Not everything, but a little bit more into international. Okay, and for the last slide here, I talk about how there's probably going to be some sort of pause, maybe a little dip. I have no idea how big or when exactly it's going to happen, but it makes sense for it to probably happen soon. And this was an interesting chart because it showed how when we have a bull market, the second year into a bull market, which is where we are right now, on average, there is about a 10% correction every time. And this chart goes all the way back to 1945. Now, it doesn't mean it's going to happen again. I mean, history doesn't have to repeat itself, but you know what they say, it oftentimes rhymes. So maybe we'll have some sort of dip. We've only seen a 4% dip at the worst of the peak so far this year. So there could probably be a little bit more, and I'm anticipating that to happen. But again, it's going to be a dip that creates an opportunity, not a panic. And so that's kind of my mindset, and that's why you're seeing me cashing in some gains, and you'll see me redeploying that here hopefully very soon. Thanks again for watching, guys, and we'll see you again next month. Bye-bye.